All right, all right. Let me know if we're live. Who's there in the chat? There's Tim. Tim is already in the chat. Today, I have a few things that I want to talk about. I added I added some more meta, so I'm gonna be showing you that. I'm gonna be showing you the moves that I'm making in the portfolio. I'm not done making moves. I still gotta make more moves in the portfolio. I gotta start showing you what moves I'm making this week. I'm also gonna take a look at what super investors are buying and selling in Q4. I want to take a look at a few portfolios. Let me know which one is your favorite super investor so we can take a look at it. We're gonna take a look at Warren Buffett, Bill Ackman, and others. So let's take a look at that. Also, war with Iran. What is that going to do this to the stock market? I don't know, but we gotta be ready. We gotta be ready. Macros out there are crazy right now. Hello everyone. Hope everyone is experiencing all-time highs from Tim. Nice, nice, Tim. I hope everyone is. Don't forget, guys, as soon as you join, hit the like button. Very, very important. Uh, and then also, I have a question for all you guys. I have a few companies. I was looking in Google pretty much, and I have a few companies that might start IPO this year. Which one would you invest in? I really want to know everyone's opinions on those. But I'm gonna be showing you. Let me just continue to open up my screen while everyone joins. I know some of you guys, are probably still getting ready. What's up, M? How's everything, M? Um, I know there's some people probably still getting ready, to join and all that. Uh, Nancy Pelosi is my favorite investor. If you follow her, you can make a lot of money. That's what it seems like. That's what it seems like. I should add that to my topics of today. But for sure, for sure. I think isn't there like a website or something that follows Nancy Pelosi's investments and like whenever she buys and sell and all that, and it actually makes money for people? I thought there was. Oh man, I think she only makes like a couple $100,000 a year, but her portfolio is like millions, something like that. But I do want to take a look at a couple of super investors real quick. What's up, Links? How's everyone? But I have a question also on that on the IPOs. Something I'm pretty interested about. You know, But right now, with those wars happening, like there might be a war coming to Iran, going to Iran. I know there's a lot of ships moving on to the Middle East, pretty much. What's up? Good morning, KC. How are you? How is it over there in Korea, man? Uh, but yeah. There's Navy and Air Force is moving right now, according to the news. There's some regional regional tensions. I was reading right here. Regional tensions installed nuclear negotiations. So president is trying to make some negotiations. Let's see what happens. Nice, nice, Tim. Yep. Let's see how it goes for KC over there in Korea. But this news, what is this gonna bring to the stock market? What usually happens when there are news about war? Usually, one of the things that happen, and actually, let me open up. I know oil prices are surging um, once again, or the stock. Let me just look up Finvis real quick so I can take a look at the market heat map. I want to take a look at the oil sector, pretty much, which is in this up real quick. Hundred, the last day performance. And oil. Crude oil. Let me see at the if you see right here, I'm gonna show it to you right now. The crude oil is pretty much up in the year to date. It's up 13.6%, and crude oil Brent is up 17.61%. So, oil stocks, it looks like, they're going to be doing pretty good, and they're doing pretty good already, actually. Let me show you guys real quick. Let me change the screen real quick right here. But if you see down here, you see Exxon is up 25% in the year to date. Chevron 20.6. And I do believe that these stocks usually get benefited from whenever there's any news about wars. KC right there. Hey, everyone. Thanks, Tim. Isra, what's going on, Isra? But yeah, but there's news on that. Walmart also is announcing earnings, I believe, tomorrow before the market opens. So want to take a look at that to see how consumer spending is going also with Walmart. That would be great. One stock that is very extremely popular right now that a lot of people seem like they're buying is Microsoft, which is down 17% in the year to date. Any of you guys are buying Amazon? I like their Copilot and their software too, so that's what I use mostly at work. But I do see a lot of people buying Microsoft, especially on X. KC, did you sell Starbucks yet? Yes, I did sell Starbucks already. I sold it. When was it? Last week, I think it was when I sold it. Pretty much. Let me show you my portfolio, what it looks like. Real quick, I'll show you guys the dividend portfolio real quick. But you can see my portfolio now, KC. I have no Starbucks. My Bank of America, you can see it right here. I only got 13 and a half shares. I went from 26, 27 shares to now 13 and a half. So I still have a couple $100 in there. I have a total value of $722 because I'm still up 87.4% in my position in Bank of America. So I'm pretty happy with my returns actually from Bank of America. This was supposed to be a swing trade, maybe sell it like in a year or so. I wanted to sell it at $50 a share. That's where I wanted to sell it at, and I've been selling it at $53, $52. So I'm pretty happy with those returns, to be honest with you. I think this was a W right there. So I'm pretty content with those returns. And I pretty much added Meta, guys. I added Meta. Let me show you guys real quick. Hold on, let me show you the purchase. Hold on, I was supposed to show you guys this before the portfolio. Oh man. Today's been a long day. It was a long day at work, especially. So I'm a little bit tired, but I can still make it happen. Especially, guys, just remember, I won't be live streaming this Sunday. I'm sorry about that, but I'll be traveling. I'll be in Puerto Rico on Sunday. And over here, it's actually going to snow. Over here in New Jersey, it's going to snow. So, yeah, I think we're getting like an inch or two or something like that of snow on Sunday. So I told my kids and my wife, I was like, yeah, you guys got to clean the snow this time because I usually do it. So, and I'm going to be at 80-degree weather. I got the luggage right there. It's already packed, actually. I just got to get my passport, though. I can't forget my passport. I got to remember to, to get it from where I have it. I got to make sure of that. Because I don't have a real ID, so I need the passport. Guys, don't forget to hit the like button. I'm about to show you guys the purchases that I made this week and the sale that I made this week. Which I'm pretty happy. I'm pretty happy with the purchase that I made today. But let me show you real quick. So I pretty much bought, right, my one share of SCHD at a share price of $31.34. I'm going to show you the weekly challenge spreadsheet also. I have it updated. But I bought one more share of SCHD, which is pretty good, on February 17. Then I went and I sold on the same day on Tuesday. I sold 12 shares of Bank of America at $52.77. So I got $633.18 back. That's how much I got back. And then what I did today is I bought one share of Meta, and it pretty much cost me $633.67. So I hit it like pretty much almost right on the money, and actually Meta recovered later in the day. So I'm gonna show you that chart in a few. But I'm pretty happy with my purchase on Meta today. It'll probably go down again in the near future. I know there's a lot of sellers. There's more sellers than buyers right now on Meta, but I am buying. I think Bill Ackman is buying pretty much. He's still buying. And let me show you my portfolio real quick. Have to add GPIQ now. You never know. You never know, Casey. You never know. Maybe in the future, maybe in the near future, you know, that will be pretty nice. I need to recover some of the dividend that I'm losing by adding Meta, because Meta's dividend is very small compared to Bank of America and Starbucks, because I lost the dividend from Starbucks and I'm losing the dividend from Bank of America to add some future growth into the portfolio, which Meta should hopefully bring. I do believe in Meta long term. I am thinking, 5 years from now at least with Meta. And let's see how it goes. Hopefully I don't sell it before, right? Anything can change at any time, but I want to have at least 5-7 year horizon with my Meta position, which right now I got $1,938. It's like my third in total cost basis, right? In the money that I have invested in it, is my third largest position, behind, of course, SCHD and Realty Income. Realty Income, I got $1,978 right now. So it's my third largest position already. I don't know. I might add another share of Meta. And then that's it. And then I'm gonna just stick to that. I think I'm gonna do that. What's good 5 years from now, it will split. Yeah. I hope it does. I hope it does, because I'm not gonna have a large position, a very, very large position. Well, based on my portfolio size, it will be a nice large position, but I mean like large in amount of shares. I want to get to like 5 shares. I would love to get off Meta. So I'm buying full shares right now because I'm selling some of my other positions. But in the near future, if it continues to stay at a good PE ratio where it's at right now, I might need to buy fractional shares moving forward on Meta until I get to 5 shares. That's probably going to be the long-term plan, but let's see. But I think I might be selling these 13 and a half shares later this week and make the move and buy another share of Meta. That's what I think I'm going to do. I do want to buy more SCHD. To be honest with you, I want to get to 400 shares as soon as possible, because my goal for this year is 500. But let's see what other moves do I make in the portfolio. Yeah. Oh, what's up, James? I didn't even say what's up to you. But yeah, but those are the moves that I made this week so far. So not much in the portfolio. Only 3 shares of Meta right now. So I'm down 0.44%. Brought down my cost because I bought it at $633. So I bought it early in the day. If we take a look, let me show you Meta real quick right here. So as you can see earlier in the day, this is at the time that I bought it. I bought it right here, like around 9 something in the morning, pretty much. This is where I bought it, like right around here, around 9, almost 10 o'clock in the morning. That's when I bought it. I went ahead, bought it, added another share of Meta. And then in the after hours, it's down once again. So I don't know, maybe I'll make the move tomorrow if it goes back down to the 630s. I like it there. In the 630s, even in the 640s. if we take a quick look right here at my quick spreadsheet that I made for forward PE ratios and PE ratios, which is one of the metrics that I use, you can see it right here at $643. It's still at under 21 PE ratio. So it's, I don't know, it's looking pretty attractive. So even at 643, even if it goes to $650, I think it still look attractive. I do want to buy more Visa, man. I really, really need to buy more Visa. But James, yeah, I hope that it does stock split. Hey, dímelo, Danny. Nice, nice, Danny. Gracias, gracias. Um, James, Meta will choose to make shares cheaper when get over $700. Yeah, that would be good. It it usually benefits investors that like cover calls and all that, and options. It definitely benefits them having a cheaper share price. There was also like one company, I think it was booking.com, that was doing a share split or something like that. I'm gonna take a look at that one. But yeah, Visa is at a 24.4 forward PE. I'm liking it right now too. But I have no cash. I think I only have like $20 in my dividend portfolio. That's pretty much it. Like right now is when I want more cash and I don't have. I don't have at the moment. Brainchild, what's up, Brainchild? Yeah, so right now, Amazon. Amazon is the one I wanna buy Amazon in my growth portfolio. This is my must buy right now. I really like Amazon. I know it's still at a 25 forward PE, 28 PE ratio, but it's usually over 30. It's usually over a 30 PE ratio. And I know that they're investing a lot in CapEx, together with Meta, Google, and some of these other companies, but like all three long term, I really do. And Google is going down, it's on the downside as of lately. Give me 1 second. Lulu, Google, Google is on the downside as of lately, which is, you know, Google is on the downside as of lately. So it's right now at 26.2 forward PE. You guys remember when we were buying, I don't know if many of you bought, but I was definitely buying when it was like at an 18, 19 forward PE ratio. That was a good time to buy last year. Let me see. Meta went for $628 for a sec this morning and thought it was going to stay there for the day. Oh man. So you missed it? You wanted to buy more Meta? Was that the plan, Danny? Uh yeah, sometimes, you could put a limit order, which is something I'm actually trying to get used to, honestly. I need to get to put limit orders, on my purchases. But yeah, keeping my eyes on Google Next. Nice. Yeah, me too. Me too. I'm actually keeping an eye on it. That's why I also made this quick spreadsheet so I can take a look at it in my phone real quick while I'm at work. And Uber, I saw some news. I don't know if it is true, but right now it's at a 15 P ratio and a 20 forward PE. I want to look a little bit more into Uber. Any of you guys are an Uber shareholder? Because I want to look into it a little bit more. I saw something, I don't know if it's true, but I saw it on X that they're going to be investing in adding chargers for electric cars. That's what I was seeing. That's what I saw. Some type of news. I don't know if it's true or not, but I do want to take a look at it in Uber. Nvidia is right now at a 23 forward PE. If earnings continue to accelerate the way they have been, especially the revenue, and I think it will. I think Nvidia is gonna continue. You know, I don't think anybody's gonna, any company's gonna um uh disrupt it like anytime soon, to be honest with you. You think Meta is dropping because of the money they are spending on AI? It's been a great value. Yeah, that's the sentiment out there on Meta, pretty much that it's their capex spending. That's what a lot of people are, or that's what a lot of investors are mentioning, out there. that it is because of the AI or the capex spending, pretty much, because it is a lot. It is a lot of capex spending. They also have stock-based compensation, pretty much, is also going up, but companies growing, they're pretty large. They also have so many small sectors, or some small companies that they hold, right? Like Facebook, Instagram, WhatsApp, Threads, so many of them. uh but yeah, that is pretty much the capex spending. I think that's what is getting investors nervous and selling. But I'm gonna be honest. I'm gonna go through this right here, which is the super investors, in a minute. I'm gonna go through that, and there's one of the super investors that is buying right now. Apple, I'm also gonna keep an eye on. I like Apple. I love their products. I would like to invest into Apple again, to be honest with you. I know I only had 1 point something shares before and I sold it. But I would love to invest in Apple once again. Yes, ready to buy 20 more shares of Meta from Danny. Wow, nice. And 20 MSFT. Bought some SoFi today, still under $20. Nice. Nice buys right there. Tim, I don't own any Uber, but they have a ton of competition. Yeah, that is true, but they're pretty large. That's the good thing. Yeah, they do have a lot of competition. They in the Uber Eats they have like DoorDash is their competition, if I'm not mistaken, right? You also have, what's that other company that does rides? Lyft, I think it is. Yeah. I think it's Lyft, something like that. So, yeah. No Uber here either. Yeah. Let's see. I would like to do my research in it. I would like to do my research in it and see. Costco is still pretty expensive. I also want to add Walmart here, to this list. But you can see, and SPGI. I also forgot to add SPGI before the live stream started. But Costco is always trading at a premium. 53.3 PE ratio and 47.9 forward PE. I think this company is just gonna continue to be like that for the at least the next decade, and I think it's just gonna continue. A lot of people like the experience that Costco brings, and then after you shop around, you go look around the way everything is set up, prices are good on things too, you know, on other consumables that they sell in there. The prices are good. And then after that, you go to the food court and you get a hot dog and a drink for $1.50. And it's not a small hot dog. It's a pretty it's a, a pretty big hot dog, and it's a hot dog plus the pizza, and then they have even the Parmesan cheese and all that in there. Their ice creams are good. I love their ice creams, from Costco. So you got the hot dog at $1.50. You can get like dinner there for like $5-6, pretty much, honestly, Yeah. If like, let's say, for example, if I was investing, if I was a young, young guy, no family, trying to invest as much money as possible, I think I will get me a Costco membership, and I'll probably eat dinner from there like almost every night. I will give me the whole chicken for $5, you know. And then here and there, you could go get a pizza, you could go get a hot dog, you could, I know it's not the best diet, but they also have a turkey sandwich there too. So but yeah, but I'll probably, I'll probably do something like that to try to invest as much as possible. No, this is advice, guys. Just remember, this is just me yapping a little bit right here and talking. Meta and Tesla are the only two I'm missing in my portfolio out of the Max 7, and I want to add them. Nice. Where do you want to add Tesla though? Tesla is pretty expensive. I used to own Tesla and I took some gains. I'm waiting for it to take a nice dip. I want some, some news that pop up. Usually happens after a certain period of time. Some news pop up, stock dips big time, and I kind of want to do some swing trading on it once again, to be honest with you. I also like Elon Musk. I think he's a. I mean, you know, not on everything that he believes, right? But I think he's just a very smart guy. Especially with them robots. Like I'm talking about business, right? No, not politics or anything like that. I think he's just very, very smart. And he can continue to take that company up and up. Um, to be honest with you. And then also those robots that they have, like Optimus, where is that gonna bring the Tesla brand? I think it's gonna help it long term, but let's see where it goes, right? But Meta right now, where do you want to add Meta, bringer of dividends? So let me know there in the chat. Um, yeah, right now it's at $643. I'm liking it just because I'm looking at it long term. That's why I like it. And if we take a look right here, let me open up before I open up Warren Buffett, which is one of my favorite investors, and I gotta read about him a little bit more. But you can see that Bill Ackman with Pershing Square Capital Management, um, in Q4, this is from Q4 2025, added Meta, you know, in Q4. So it's right now 11.3% of the portfolio. So Bill Ackman has been buying Meta. Why? There has to be a reason behind it. There's Amazon also is now 14.2% of the portfolio, added 64%. 64% into Amazon. And then you have Uber right here, which Bill Ackman reduced 0.21%. Google, Bill Ackman sold a lot. I'm guessing he did some, you know, I don't think it was bad timing if you're trying to move capital, because Google right now I still feel like it's a little bit overvalued. I think there are better opportunities for sure. I think, even though not saying that I don't like Google long term, but he reduced his stake by 86% in Google right there. And I don't see that he moved Hertz. I don't know why. I would move on from Hertz, to be honest with you. I don't know. I'm not a fan of that company. But Amazon 64%, Google GOOG, he reduced only 2.5%. So I'm guessing he's moving on from GOOGL, Bill Ackman. So because that's a big reduction right there. In GOOG, he only reduced 2.5%. So he's still holding Google. He's still holding a large stake in Google. And you got Hilton reduced by 0.06%, but mostly was that Meta buy and the Amazon buy, which I really like. I really like those two buys, to be honest with you. Then you have Warren Buffett. Warren Buffett, hold on, there's a lot of moves right here. But let me look at the one that I wanted to talk about, which is this one right here. In Q4, he reduced his Amazon position by 77.2%. I don't know if you guys can see. Can you guys see that? Maybe I can. Second guy. So you guys can see it a little bit more. I think right now it's better, right? With the letters a little bit bigger. But you can see that Warren Buffett pretty much reduced the Amazon position by 77.2%. And I'm going to be honest with you, I think that was a pretty good move because Amazon was at all-time highs in Q4, right? If we take a look, let's take a look at Amazon in the last couple of months. Let's just see right here. And I think, look at this. In November, it was like around $254, $249. It was in the 240s. So it was pretty much like, at all-time highs in Q4. I don't know when he sold. He probably sold right here, in the 220s, 230s. Even in the 230s, that was, I think, a pretty good sell. I believe he bought some time ago, like a year or so ago. So he bought it at a much cheaper price, but you can see, he pretty much sold it like at all-time high. So I don't think that was a bad investment right there, I'm guessing. took some gains and then moved the money around, and then now it's on a dip. Now he has a chance to add even more if he wants to. Let me close this ad real quick. But yeah, reducing it by 77.2%. Now I would like to see Berkshire Hathaway's moves for Q1 2026. I think that's going to be very interesting. Will they add more Amazon once again, under $200? I don't know. What do you guys think? And then let me see. There was a lot of moves here. You see, he's selling more and more Apple. He's still 22.6% of the portfolio, but reduced it by 4.3%. Bank of America got reduced 8.94%. He has been selling, or Berkshire Hathaway, right? Because I think Warren Buffett retired already. You can see he has been reducing Apple and Bank of America for the past couple of quarters already. So that is a move that they have been making. He did have a preferred deal on Bank of America, so he got his shares pretty cheap when they pretty much got it. But yeah, let me see the Amazon. Yeah, the Amazon. If you see right here, the reported price that he sold it at, supposedly, hold on, where is it? Where's the Amazon? Yeah, right here at $230. So that was pretty high right there, to reduce that. But you can see Apple at $271 and Bank of America at $55, which it was a good deal right there too. Coca-Cola, he doesn't touch it. Still makes him millions and millions of dollars in dividends. Added to Chevron right before the run up in share price. This was good timing. This was good timing. That was great timing because let's take a quick look at Chevron right here. CVX. Let me see Chevron. You can see that in Q4, this was great timing. I don't know how they knew. I don't know how Berkshire Hathaway knew, right? But you could see that in Q4, it was in the 150s, 140s, 150s, right? And then out of nowhere right now, bam, just went up to $182 in share price, at 183. So how did they know it will, run up in share price or it will be on the upside? That's just, that's just crazy. That's just great timing, right? Do you guys think it's a coincidence or is it, what do you guys think? I think I want it under $600 so I can buy it in portions. Okay, all right. That sounds good, for Meta. Not a bad idea right there. That's a pretty good share price. Hopefully those go down under $600 once again. But yeah, but that was great timing right there on Chevron. Then you also have Chubb added 9.3%. Let me see what else. Constellation brand reduce. Let me see. Pool Corp also reduced 11%. And then Atlanta Braves. I didn't know that he invested in the Braves in the baseball team. I'm guessing. So reduced 48.3%. It looks like he's moving on from that. But that was some of the portfolios. Any other portfolios that you guys want to take a look at? One that I wanted to take a look at was Bill and Melinda. Give me 1 second. Yeah. So also another thing that I have been noticing, and I have noticed on X too, is that Bill Gates have been reducing the stake in Microsoft the past couple of quarters too. Look at it this time, reduced 16.3%. I know he has millions and millions of shares, so that's it's probably not much, but they have been reducing their stake on Microsoft, and this is not the only quarter that they have done that. If I'm not mistaken, they have done it in the previous quarter and maybe in the one before that. But Berkshire Hathaway reduced 10.8% also. So those were the only two sales for Bill Gates. Walmart still holding steady. Caterpillar, I think this is a great investment right here. Especially Caterpillar has been performing very, very well. Very, very well in the year to date. I'll show you guys right now. This one, I know some of you guys hold it, but look at this. It's up 31.2% in the year to date. Caterpillar. And I know I forgot who mentioned it there in the chat before, but I know it has been mentioned before in this chat. So maybe it should have been something that I should have bought before. Buffett added a huge amount of Chubb, CB ticker. Never heard of it before. Hmm. Let me see. Yeah, Chubb right here, which is also look at this in Q4. How does he get this great timing on these stocks? I'm not trying to insinuate anything, or try to make it seem like anything, but look at this. Bought in Q4 when he was in the 200s. Now it's at $329 a share. So it's up in the year to date. It's up 5.5%. In the last month, it's up almost 10%. Look at this. Chubb Limited is an American Swiss company. Uh-huh. New York the S&P. Chubb is a global provider of insurance products covering property and casualty, accident and health, reinsurance, and life insurance. So it's an insurance company, pretty much. That's what that is, Tim. He likes insurance companies a lot. Dividend is 1.18%. Also likes dividend paying companies, pretty much. Yeah, let me see. Yeah. So this is sold. They have sold from the Bill and Melinda Gates. There was another super investor I wanted to take a look at. Let me see. Let's see Chris Hahn. Take a look at Chris Hahn to see what moves he made. You aren't looking at the overall performance of those funds, just the individual stocks. Some of them are not great. Yeah, no, I'm just looking at the individual stocks to see what they are, you know, what they're adding, what they're selling. Yeah, I could take a look right here, right at the reported price. Is that what you want me to give you? Visa reduced 1.19% from Chris Hahn. Added some Microsoft in Q4. Wow. Reported price was at 483. Current share price is under $400. So yeah, not a great time to buy Microsoft, but it all depends. If they're buying long term, will Microsoft recover? I think so. SPGI, S&P Global, also another one. Should have waited a little bit. Right now, SPGI, I think, is at a good deal right now. But this one added 5.3%, and the stock is down. I don't know this one. I don't know the other one. But those were his moves. If we take a look at SPGI real quick, which is one that I have in my stock, in my watch list. Let me see. He's down almost 20% in the year to date. So, let's see if he up his stake in SPGI in Q1, to be honest, because I think it makes more sense. He was buying pretty much right here, in the 400s, upper 400s and $500, I'm guessing. But then now he's down. So hopefully he continues to hold. I do like insurance company. Who doesn't like a company that gets more money from people that never create a problem? Perfect racket, if you ask me. Yeah. Yeah. I don't know much about insurance companies yet. Maybe in the future I will learn. But yeah, no, I agree. I agree with you. But yeah. Let me see which other super investor you guys want to take a look at. Let me know there in the chat. A couple more that I wanted to take a look at. Looking right here. Daniel Loeb. There's Bill Ackman, Christopher Bloomstrand. Uh, mm, Valley Forge Capital. Take a look at this one. A lot of moves though. Added more FICO. Um, yeah. Added more SPGI also. A lot of these companies are down now in Q1. MasterCard also, which is down in share price also. Moody's, Visa. Wow. Reduce the stake in Intuit. Wow. Reported price is it was a $662, reducing the and then now it's 389. So let me see. ASML addition more added more. Wow. But Intuit, let me take a look at Intuit real quick. INTU. Take a quick look right here. In the year to date, it is down 41.1%. So pretty bad timing to invest in that one in Q4, to be honest with you. Wow, that was pretty bad timing. You can see a lot of these companies. Wow. These super investors can also make mistakes, I'm guessing, right? You know, not because they are super investors and they have, millions and billions of dollars, means that, they make the right choices all the time, right? It can happen. It can happen to anyone. It can happen, with us with $100, with $1,000. And it can happen to super investors. But these all seem like bad timing, to add in Q4. To be honest with you, in this one, Valley Forge Capital. Let me see who else do you guys want to take a look at? Howard Marks. Let's see. Reduce Ivor Pharmaceuticals. Not interested in many of these companies. To be honest with you, even though I should, I should learn a little bit more about them. Yeah, a lot of companies that I don't know. Don't know much about them. But yeah, at least I wanted to go through Bill Ackman and Warren Buffett, which are the two that are very, very popular out there, and they've been talked about a lot. Especially on X. On X is he's been very, very popular, a very, very popular topic. To be honest with you. And let me see. Yeah, now with the with maybe a war happening in Iran, what are some stocks that you guys are looking at? Or do you have already enough oil companies? Do you have enough Chevron? Do you have enough Exxon in your portfolio? You know, with the war happening. You see what else? I did wanted to talk to you guys about. Oh, let me show you the portfolio real quick once again. But I'm gonna show you the full portfolio real quick. Yep. So the full portfolio is pretty much at 35,900. It's like it's been staying under 36,000 forever, man. Performance, I'm up $5,300 in gains from this portfolio. I'm up that equals to 17.6%. Some of the positions that I still have in the red are iBit and Netflix. iBit, I'm down in Bitcoin. I'm down 31.3%. So I'm down big on that one. I'm down big. Netflix, I'm down 6% also in my position. I would love to add more to those two, but I have no cash right now. And the position that I really want to look at, or the position that I want to build more, is Amazon. I got 9.9 shares right now. I'm only up 2.5%. That's all I'm up right now. Only 2.5% in my Amazon position. Google is still up 83.6%. So I'm just waiting for it to go down a bit more in share price. I think I will buy maybe under under 290 maybe. I'm gonna start getting a lot more interested in adding more Google, even though my cost per share is at $165. um but or maybe even lower. I think I'm gonna go even lower, to be honest with you. I want to get it like at a cheaper PE like it was a year ago, when the AI scare was happening. Over how long what? I'm sorry, I missed that. And yeah, but I'm pretty happy with my position there in the S&P 500. 29.8% in gains right now. That's about $2,000. I'm still thinking if I should sell this S&P 500 index fund position and move the gains to another one of my positions. Oh, my returns. I have to log in into my these are pretty much unrealized gains. That's what I'm mentioning right now. $5,300 unrealized gains. My returns, I usually show it in my portfolio. I did start investing in 2022, but I put like a couple $100 in my taxable. I bought a couple shares of and this is true story. I bought a couple shares of AGNC, which I'm sure you guys know about it. AGNC, and then I held them for like almost all of 2022, and I didn't invest because the stock market went down, and it was on the downside, and I didn't know what to invest in or anything like that. I didn't know much about investing. Then later in the year, I started buying like SCHD and on other stocks. So I've been really, really investing, let's just say, since end of 2022, but beginning of 2023. I think it was in November when I started, November of 2022, I started getting a little bit more heavier. And honestly, some of my positions then didn't even make sense or nothing. I invested in AGNC. I invested in another company. I forgot what it was. Um, but it was not that good. I invested mostly in high yields. I really like dividend investing. And then I started, moving my portfolio a little bit more, or consolidating, and, getting some other positions, more defensive value companies, like Procter and Gamble, Johnson and Johnson, Coca-Cola also. I really like Main Street Capital. I started adding it like I think it was in 2023 when I started adding Main Street Capital. That's why my cost per share is at $39 and I'm up 51.2%. But I have anchored to the share price in Main Street Capital, so it's something that I need to invest some more money into Main Street Capital. And then I sold some of those positions like MPW. I sold AGNC, and there was one more company that I didn't really like. Then later on, once I did a little bit more research, so I did that. My returns overall, I have to log in into my Fidelity account, so I'll probably show it. Maybe I'll show it on the DCA Friday episode. I'll show it there. I don't want to log in right now into my Fidelity. Let me see. Canadian stocks are doing really well right now. TD is killing it. Canadian banks always do well. Dividend growth stock as well. Yeah, yeah, that is good. Let me see TD. Let me take a look at TD before I go back into my portfolio. Uh, this one, right? The Canada one. This is the one that you want me to take a look at. Uh, in the last year, it's up 54.6%. Wow. With a 3.28 dividend yield. So if you guys, I don't know if you hold this one for like a long time, Tim, but you probably, if you do, you probably have a much, much higher dividend yield than this, than 3.28. But yeah, look at this. Look at the upside on this one, on this company. It went from like 70 something dollars to now 131. So that's like almost double already, you know. It was around that price in 2024. That's when it was around that share price. So yeah. Let me see what else. Netflix, iBit, Bank of America. I'm almost done. It's crazy to to say that I'm moving on from Bank of America. Um, I've been wanting to. I've been talking about it for quite some time, to be honest with you guys. And you guys were probably tired of it, of me talking about it, but I really wanted to move on from Bank of America already. I know banks are cyclical a lot of times, so I have some of it, not a ton of shares, maybe 7 or 8 shares. That's still good. That's still good. It's up a lot. You still get some dividends from that position. That's good. PG and ABBV sent out this week. Hmm. What do you mean sent out? Like you sold them, Boogie? Uh, uh let me see. I think you retracted your message, right? But yeah, SCHD, I'm at 376 shares. And one thing I wanted to tell you guys, I finally crossed $10,000 invested in SCHD. So I'm gonna be paying $6 every year for having these shares. So 376 shares. So 18.75%. I'm in unrealized gains right now. 18.7. So it's 33% of my full taxable portfolio. Oh yeah, the dividends from Abbey and from Procter and Gamble. I did get my dividends from Procter and Gamble. That's why I have about $20 because I got dividends from Procter and Gamble. I also got dividends from Main Street Capital and Realty Income. I got, but yeah, we got dividends of Procter and Gamble. That was pretty good too, because now I'm up to 13 shares, which I was adding. I was adding Procter and Gamble when it was under 150. I added more and more. I started adding under 160 little by little, but then as it went down and it was on the downside for some time, for like a couple months. Let me show you guys real quick. I have it right here on my list. Um, Let me do, yeah, in the last year. So it was going down in share price all this time. I think I started buying, like, I think it was around here. I think it was like in July or not, or something like that. Uh, like around July of 2025, I started buying and buying and buying more and more Procter and Gamble. I was buying on a weekly basis. I even bought a whole share. I think it was like right here around $138. Um, so I bought Procter and Gamble quite a lot, and then now it's on the upside, which is good. Look, it's up 6.7% in the last month. Year to date is up almost 10%. This is what one of those value defensive boring companies look like. Whenever you never know when it can go up or it can perform better than others. And never mind, I didn't catch your message. I'm sorry, Casey. But yeah, so that is Procter and Gamble right there. If you guys were following the channel, you guys would have seen. Show us your yearly dividend. That's been growing a lot. Let's celebrate. So actually, Tim, it has been taking a hit, actually, because remember, I sold my Starbucks. Let me sell it to you. Let me show it to you real quick. I haven't added my Meta dividend yet, but I know that it's not much. But if you see right here, oh man, such a bummer. I'm down now under $900 in estimated yearly dividends because I made the move of Starbucks to I sold my Starbucks and I'm selling my Bank of America to add more Meta, to get some more gains in Meta. I think that's why also maybe KC mentioned GPIQ earlier. Maybe I should add something like that in the near future, or maybe later this year. I don't know. I'll probably look into it later on this year, maybe in the summer. I'll start looking at something like that to add some more dividends. But yeah, I've been losing some dividend income, Tim. That's the only thing I'm not too happy about my move. But I think Meta is going to give me some great upside in the future in my portfolio, in this portfolio right here. And hopefully dividend growth. Hopefully, like James mentioned earlier, some share splits on Meta, maybe a couple shares for one. and then my position gets larger, I can continue holding. But right now has been taking a hit. Now I'm under $900, man. That's like one share of Vici to get back to 900. But I only have, Tim, I only have $20. That's all I have in my portfolio right now. And I'm almost at 30,000 in my dividend portfolio. I'm almost at $30,000 in my dividend portfolio, which is crazy. 18.9% of unrealized gains from this portfolio. My SCHD yield on cost 3.94%. I got an almost 4% yield on cost from SCHD, but I'm going to continue buying every week. So this yield on cost will go down as the share price of SCHD continues to go up, which it has been performing very, very well, especially in the year to date. You can see the year to date is up 15% on SCHD in share price appreciation, with investors going towards value stocks and value ETFs. Some of these great ETFs, like in SCHD, probably BYM is also performing well, I think. FDVV, I think, is also performing well. Gotta take a look, but SCHD is like, you know, my favorite one. And can you believe a month and a half, almost 2 months ago, it was like in the $27, $28 share price. Let's see, let's see what happens. One that I've been buying before we go back to my dividend portfolio is this one in my Roth. I built up a nice position on SCHG. This one right here. In the year to date is down 5.8%. So I've been adding this one. I've been adding this one to my Roth IRA because I have some cash there sitting. So I bought a couple shares of this one. I've been buying in the past couple of like 2-3 weeks. I've been buying this one and building on my position even more. Planning on holding long term because when you look at it right here, when you expand it, and this is what I like to look at. This is why I love investing long term and I like thinking about it long term, because when you open it up in the last 5 years, it's up 82.9%. When you open it up in the max, you can see that is only upside. That is it. That's all you see is the upside right here. This is great looking. Great looking. As you can see right here in SCHG. So this one, I wanted to take more of a hands-off approach in my Roth. And in my taxable, if you see, I've been moving on. Yeah, I even moved on from VGT, which is what I'm still thinking about. What am I going to do? Am I going to add VGT or FTEC? But I think I'm going to go with VGT again because VGT is an ETF. I think FTEC is an index fund. I want to sell it a real time. I don't want to wait until the end of the day. That's one thing that I don't, I don't like anymore about, holding an index fund, even though the expense ratio is much less. And I know it shouldn't matter if I'm holding long term, but I kind of like, selling my shares when I want to, and VGT has a lot of liquidity. It's very liquid. So if I sell a share, it's going to sell pretty quickly. But yeah, Tim, I pretty much have been taking a hit on the estimated yearly dividends, as you can see. But I'm pretty happy that I have Vici. I grew my Vici properties position because I have an estimated yearly dividends of $114 from that position. Then you got realty income at $115 in estimated yearly dividends. So those two, I would love to grow them even more because they give me a higher yield, which I like a lot. And these companies are diversifying. They're doing better and better. So, which is good. Let me see. FDVV traded daily, like a stock. Yeah, I bet a lot of people like it out there. I'm like an okay, not a huge fan, but I don't think it's a bad ETF, to be honest with you. Let's take a quick look at FDVV. 65% of holding in FDVV and SCHD are same, just different percent. Yeah. One thing that I see with FDVV is that it has double the expense ratio as SCHD. SCHD is only 0.06 and this one is 0.15, which it can be significant when you have a lot of money invested in this ETF. But you can see dividend yield is at 2.76, which is something that I like more SCHD. But in the last 3 months, it's up 6.9%. Let me see. In the year to date, it's up 4.7%. So it's trailing SCHD. In the last year, it's up 14.8%. And in the last 5 years, you can see the upside, 74.5%. This one has more share price appreciation than SCHD. And it's because it has a lot of technology, much more than SCHD. It has 25.6%. You can see that it has Nvidia, Apple, Microsoft, Broadcom. Microsoft is not doing well right now, but Nvidia, they have had some great gains. Broadcom also. JP Morgan Chase, this one has been performing very well. ExxonMobil as of lately, that's another one. Hershey Company has been recovering as the cocoa prices go down. Go down. They're on the downside. Hershey should have better margins in their balance sheet, so that's good. Coca-Cola also performing very well. Visa has been okay, has been flat. Bank of America also has performed well. So Pepsi, many of these. Let me see. James, it outperforms SCHD. Yeah, in share price appreciation, yes. Look at the not the ETF screener. Let me do this. But I like SCHD's dividend growth. That is something that I like a lot. Let me see. Price change, total returns. Let me see. So FDVV. Yeah, it's just FDVV started in 2016. So let me do the last 5 years, I guess. Let me see. Yeah, in the last 5 years, FDVV in share price change 74%, 74.5, compared to SCHD 40.3. And then in the last 10 years, if you see SCHD, but SCHD has more history, you see. I think inception day for FDVV was September 2016, I guess it looks like. So SCHD has more history. But you can see that SCHD has 150% share price appreciation compared to FDVV 136%. But then this is what I like, and I know SCHD has had much more time to grow their dividend, but you can see 174% in dividend growth in the last 10 years compared to 61.5%. If you open up the last 5 years only, then FDVV has outperformed in dividend growth SCHD with 59% compared to 54%. But I like to open up the the longer one, and you can see the upside, much better upside. So this is what I like, Yeah, you can see right here that FDVV, it has raised their dividend, and then for some reason they had to like lower the dividend a lot, even in the negative in 2021. So not one that I want to hold for the long term, especially when you look at SCHD. You can see the nice growth, pretty much positive on almost all the quarters, in dividend growth. So you can see the steady growth, the steady upside. It's just, much better. I really like this. That's why I like SCHD, because I want to hold it long term. I want to hold it forever if I can. and just continue to collect the dividends and get that nice dividend growth. For share price appreciation, in my Roth IRA, I have SCHG. So that should help me with share price appreciation in for the future. I also have Amazon for share price appreciation, in my taxable, which I show it here. Then I also have Google. Now I have Meta. So I'm okay. That's why I like SCHD. I think this one is just as a value ETF, to collect those dividends, even if the sentiment out there is not great. If everybody's scared about AI or anything like that, SCHD will continue to perform. It has companies like Coca-Cola. What else? It has many, many companies that, they're not going to go away anytime soon. They have energy, consumer staples, healthcare. So you can see Lockheed Martin, Texas Instrument, Chevron, Verizon, Bristol Myers Squibb, um, Pepsi, Coca-Cola, Home Depot, AbbVie, Cisco, UPS. I'm not a fan, but it's still there. Ford, all these companies. Target, not a fan of. So, and they're gonna do the reconstitution once again. So, you know, I've been doing that in my portfolio pretty much. By removing Starbucks and then now adding some Meta. But I do want to add another, like if I add another position, I don't want to go with anything like Meta that it has low yield. I want something higher yield, to be honest with you. If someone gave you $1,000 to invest into a high dividend ETF, what are you buying? Very good question. Let's say in a hypothetical a scenario, right? I do have a few in mind. So I'll tell you right now. I do have a few in mind. So this is one of them. Jeff Q, is from JP Morgan Chase. I really like JP Morgan. I wish I would have bought JP Morgan instead of Bank of America on that Silicon Valley Bank closing. When all banks just took a hit, everybody got scared, so there was a sell-off in banks, and I took advantage of it. I invested in Bank of America, held it for 2 years, and made over 80%. I think I'm pretty happy with that. But I have Jeff Q is one that I do have in my watch list, right? And I have it for a while already. It's not it was one of the first ones that I added as a cover call ETF, which it has a 10.6% dividend yield. Since inception, average annual returns have been almost 16% from this one. And it holds tech, mostly tech, which I like. Google, Apple, Nvidia, all that stuff. So we have that. Then we also have SPYI, which is another one that I like, and that's the NEOS S&P 500 High Income ETF. This one has a 11.85 dividend yield, a little bit higher, but the expense ratio, and this is why I had a second to JetQ, the expense ratio is 0.68%, which is something that I don't want to pay too much. But if you see in the last 5 years, there's some share price appreciation, 4.21% in this one. But then KC, Korean Cardboard, who's there in the chat, mentioned this one, which I didn't know anything about, which is GPIQ. This one I kind of liked from the cover call ETFs that I've seen out there, because I've seen many of them. This one has a nice lower expense ratio, 0.29%. Dividend yield is at 10.1%. So I like that. Monthly dividends, of course. And you can see in the last 5 years, in share price appreciation is up 33.6%. This one tracks the NASDAQ 100. So that is something that I like from this one. Since inception day, you can see average annual returns have been 25.5%. And then you also have GPIX. So these are the four that I have, Tim, if you're talking about high dividend yield. These are the ones that I have. I also like this one. GPIX has a lower dividend yield, but this one tracks the S&P, which I like also. Same expense ratio, 0.29%. And then if I open up the last 5 years, it's also up in share price appreciation, 33.5%. So you can see that since inception, average annual returns have been 23.05%. So it will probably be one of those four. One of those four. I'm honestly, well, I can't tell you, Tim, because I haven't really done a deeper research into these ETFs, right? But I do have them on my watch list for the future. Um, but I kind of like these two more, these Goldman Sachs, GPIX and GPIQ. I like them more. Let's just say that. They're becoming more of my favorites and climbing up the ladder. But yeah, I think this will be, those are my four. I haven't seen anything else. Is if there's something else, I think there's Devo. I think also let me see, I think it's Devo, right? The Amplify ETF. It has a 6% yield, expense ratio 0.56%. But look at the average annual returns have been 13%. Not bad. I think there's another one. I forgot which one it was, but that's the top four that I have right now, Tim. The top four on anything high yield ETF like that. You know, nothing from Yield Max or nothing like that. I would just go with one of those four. And honestly, GPIQ and GPIX are a little bit more of my favorites. So I'm kind of glad KC mentioned that they're in the chat that one time. I'll always remember KC because of GPIQ, pretty much. One of the reasons, and he's always active also. Um, James, expense ratio mute unless dealings with millions. Their ROI cover the $16 per 10K. Yeah, that is true. That is true. But you just never know, right? What if I become a millionaire in 15, 20 years, James? You know? And I could put a couple $1,000,000. Right? No, but you're right. You're right about that, but I'd rather if I can save anything on that, especially with those ETFs, right? If I add it to my taxable, it's gonna be I'm gonna have to pay the expense ratio plus it's higher taxes because it's not and then I have it there. The dividend is not qualified, right? So you pay higher taxes. I'll take over ROI over dividend growth any day. Yeah. Yeah, that's overall. Yeah. UPS will outperform any holding you have in 2026. That's good. That's good, man. And pay a better dividend. Yeah. I'm not a fan of UPS, but it's been a stock that has performed very well over the decades. Um as you can see right here. Let me just show you guys real quick. In the last 5 years, though, it's down 25.8%. But if you open up the max, it's up 78.6% since the early 2000s or 1999. Dividend yield right now is at 5.65%. One of the things that scares me is this, James. Payout ratio is at 100% right now. I'm guessing because the dividend yield is so high. I think some of it is the when they lost the contract with Amazon, and now Amazon does their own deliveries pretty much. They have their own logistics now, so they don't have to pay UPS anymore. And they lost a nice amount of revenue on that, if I'm not mistaken. You see, it has been on the downside as of lately. Do they still have business? Yes. You know, um, Yeah, I think they're still okay long term. Not a stock that I'm a fan on, but yeah. um, let me see. It's not what I would consider high yield, but yeah, four solid picks. I invest into two of them. Okay, which one do you have, Tim? You probably have mentioned it before, and I probably forgot. I'm not a yield max guy. I got in and made some cash, put that cash into safer place, living off of those decisions right now. Nice. That's good. That's good. Anytime you can, you get some returns and you can also live off the dividends. That's always great, man. That's my goal right there too. I want to be in that boat the same as you, man. Kendall, they made a mistake and have corrected many of them, and it will recover to 200 plus. They did not lose; they gave it up. Ah, okay, okay, got it, got it. I thought they lost the contract, but yeah. UPS did not want business. It was not profitable for them. That those details, yeah, I don't know much about them. Um, I don't know much about them, but that's how I read it in the news, pretty much. So I know that news can exaggerate some things. A lot of times I take news like with a grain of salt, pretty much. But yeah, let's see where it goes. Also I think that the union contract, right? It was pretty expensive. JebQ and QQQI, nice, nice picks. Ooh, QQQI. That's another one that I've seen a lot out there. Is the NEOS Nasdaq 100 High Income ETF. 0.68% expense ratio. Dividend yield 14.2%. That's pretty good right there. Very good dividend yield. Up 4.5%. Inception day was 2024. You can see average annual return has been 17% on this one. It holds mostly tech also, Nvidia, Apple, Microsoft, Amazon, many of those good companies. Netflix, Cisco, Palantir, Lam Research. Yeah. Now after cutting Amazon, they're going back to being profitable. Yeah. Yeah. It'll probably turn things around, to be honest. And I don't think packages are gonna are gonna stop. I think everything is gonna go, in the future, it's gonna go more towards deliveries. So some of these companies will benefit, but I think one that is gonna take a lot of market share is gonna be Amazon. That's why I'm a little bit more bullish on Amazon in that aspect. If I'm not mistaken, Walmart also have um, a deal with Amazon now to deliver their packages and stuff. Let me see. Walmart. Yeah. I think Walmart is also one company that will be here in 10, 15, 20 years from now, honestly. They have been evolving with the market too, and with everything else. So they also ship from their warehouses and everything, so they can compete with everybody. With Amazon, with Costco, pretty much. But yeah, Walmart has been in the upside in the last 6 months for 26%. In the year to date, it's up 13.6%. Let's see where it goes. Um in the before hours, pretty much in the morning hours before the market opens. In the last 5 years, it's up 158%. One of my coworkers invested in Walmart. I think it was in 2024. So that coworker has some very nice gains. PE ratio right now is at 44. In forward PE 44 also. So it's pretty pricey right now, Walmart. Any of you guys hold Walmart in your portfolios? Dividend yield is only 0.74%. Mm-mm-mm. See what else? 9:35 p.m. So yeah. And guys, don't forget to hit the like button. Very, very important. As soon as you join the live stream, very much appreciate it. And subscribe. Subscribe if you like to join the live streams and any stocks that you guys want me to look at. After I show you this real quick. I don't know if any of you guys invest in any of these companies, right? But these are IPOs that might happen in 2026. Which one would you pick? Which one would you pick? And you could just put a number there in the chat. But which one of these? You got OpenAI, you got SpaceX, and you got Anthropic. Which one of these picks, like if they do have an IPO in 2026, which one of these would you invest in? Let's say you have, let me use Tim's previous analogy or scenario. You have $1,000 or $10,000. Let's just say you have $10,000. There's an IPO and you have to choose one of these three to invest those $10,000. Which one would you choose? Which one would you choose? Out of all three of these, OpenAI, SpaceX, and Tropic. Let me see. James, short them all. Yeah. I think that would be some nice swing trade, right? But OpenAI, SpaceX, or Entropic. I don't know which one I would go with, to be honest with you. I don't know which one I would go with. Even though I see a lot of people using more and more OpenAI, um, and Anthropic has been very popular. Anthropic, which company owns some Anthropic? Hold on. Hold on. I have it like right there. Company. Yes. Second. Mm-mm. Let me see something real quick. But yeah, let me see. Anthropic has raised 64 billion total funds, value of 380 billion. Uh, yeah, so if you see some of the ones that have invested in it is Amazon and Google. Microsoft, Amazon, one of Anthropic's earliest partnership focus on AWS. Google also a significant investor that provides Google Cloud infrastructure for model training. Then you have Microsoft pledge $5 billion in it. And Nvidia also participated in recent funding rounds to support the broader AI hardware and software ecosystem. Also, Salesforce. Yeah, in Anthropic. Yeah, let me see your answers right there. None on IPO day. I may take a look at a few months later. Okay, that's a good strategy, honestly. That's a good idea. I think there's gonna be a lot of volatility, to be honest with you, on IPO day. VXUS might be a play that US investors might want to look at right now. It has a global spectrum. Yeah. I'm gonna take a look at it. But yeah, the only thing is that once, let's say these three companies IPO, right, or any of them, where is the money gonna come from? Which sector? Is it gonna come from other AI related companies? Um, either other related AI companies or like any tech stocks. Is it gonna come from value companies? In the defensive sector, oil companies. I don't know. Maybe crypto. Will it come from crypto? Because they expecting it. I think OpenAI like over $1 trillion, right? I think IPO or something like that. So yeah, James, Elon gonna laugh all the way to the bank. Yeah. especially if SpaceX have a great IPO. Yes, I agree. The one who gets the most corporate welfare, James, he's gonna get paid and watch the price dump and then buy the shares back at a discount. Yeah, a lot. I don't know, man. Don't you see like the great timing on these guys? When they invest in these companies, and I showed you earlier with the super investors that bought in Q4 like oil companies like Chevron in them, and then now they're up a lot. That's just crazy. Then get bonus stocks and end up with more than he had in IPO. Yeah. He's gonna make a lot more money. That is so true, James. That is so true. But yeah, I was just really thinking about it. Seeing more and more news about the IPOs, Tim. I can't tell if the international growth is actual growth or the weaker dollar, but I don't track international. Hmm. Where did this come from? Where would what come from, Anders? Having said that, CRCL and CRWW IPOs paid for my last vacation. Nice. Nice. Let me see. CRCL. What is this? A Circle Internet Group. When did they IPO? In June of 2025. Oh, wow. Did you do this swing trade right here? From IPO into, wow, $240. That's pretty good right there. And then now it's at 63. Wow, yeah. I'm guessing this is why you have experience in IPOs already, right, Em? That's why you know that usually IPOs just go crazy, go ballistic. At first, they're on the upside, and then bam, you see some downside right there. And you got CRWW, CoreWeave. Let me see. When they IPO'd in March of 2025, they went from $47 to $183. Wow. And then now at 95. We should do something similar. And do some swing trade on some of these IPOs. Let's see what happens. US people have no idea what's happening globally per se. Hope you're up to date on everything. From M. Yeah. To anyone that is joining the chat now, which IPO, right, would you put $10,000 if you had it? Which IPO? OpenAI, SpaceX, Anthropic. I don't know which one I would go with, honestly. I think Anthropic looks like the best bet, maybe. Um, but I will be interested in SpaceX, even though I'm with James on that. And, Elon Musk is going to get a lot of money from that. Let me see. I didn't sell at the very top, but it was nice. Same with SIDU. I have some experiences, but it's still gambling. Yeah, that is true. You can lose a lot of money. And yeah, that is true. It can happen. It can happen that you lose. You don't have good timing, and you end up selling when it's on the downside. Like some of those stocks that we just looked at. But yeah, yeah. But it looks like they go up at the beginning. They're on the upside for some time, and then after that they go on the downside. But yeah, I just wanted to ask that question here real quick. And I don't think I have anything else for today, honestly. I don't think I have anything else. Anything else that you guys want to talk about before I log off? Yeah, because 9:45 already, so I gotta get off soon. Only have a few minutes left. Let me see if the after hours for the S&P. Oh, Let me see in the after hours for. Let me see Netflix. Netflix in the after hours, it closed at $77.95. So pretty much flat. Let me see Microsoft. Wow, Microsoft is under 400 once again. Any of you guys buying any Microsoft? Hockey, 3 or 4 quarter final games went to overtime. Who's playing right now? I never really watch hockey. Never watch hockey. But I known people over the years, especially at my workplace, that on my jobs that have been liking hockey. But yeah, that one is. I like this. The meta is on the downside in the after hours. 0.5%. Canada won in OT. US won in OT. Oh yeah. The winter games. Whoops. Hit the camera. Okay, the winter games. Yeah. Let me see. Coca-Cola. Coca-Cola has been on the upside, especially as of lately. You know, in the year to date, it's up almost 14%. So I can't buy any Coca-Cola. And I wanted to be the focus this year, Coca-Cola, to build it up some more. Go Norway. Nice. Yes, go Norway. Go Norway, go Canada, go US. Let's go. Let me see. Google is slightly on the downside, but not much. Let me see at Ethereum. Where is that? Still down 40% in the last month, but in the past couple of days, it's up 0.888%. Let me see. It's on the upside. It's about to hit 2,000 once again in Ethereum. Bitcoin is at 66,000 once again. I'm seeing a nice opportunity there, for me, for my investments. Hopefully, I get some more money soon that I can invest in this one. But honestly, I want to buy more Amazon. That's where I want to buy more. That's where I see some nice value in Amazon. But you can see, this downside right now in Bitcoin can drag for the whole year. You know, this can drag for the whole year, to be honest. So that would be okay because then I'll have time to build up my position a little bit more if I want to. Turn the drip on for KO if you don't want to actively invest in it. My friend just said that. Wasn't me. Yeah. Yeah, but right now it's pretty pricey and I'm just redirecting the dividends right now, let's just say. Let's just say that. You know, I use some of the dividends, when was it? Uh Recently for Visa, I think it was. Let me see. Bank of America, I'm almost done selling it. So it's in the after hours still at $53. Amazon is at 204. Hims, any of you guys investing in Hims? It's at $15 right now. Wow. I remember Thrill and Jeremy were talking about it a lot at under 25, but look at this. Yeah, it has been on the downside. Almost 80% Hims in the last year. Wow. 51% in the year to date. It hasn't been a great time for Hims. Hey, what's up, Thrill? Sell Coke. Not a bad idea, to be honest with you. And I've been contemplating since it's on the upside right now. Nice returns. I need to boost my dividend income because now I lost dividend income in my dividend portfolio. I could put it in something like SCHD. Um or maybe buy some more Vici, get some more higher yield. Vici, I think, is still at a pretty good price right now. I like it under $30. It's at $29 right now. It has been recovering in the year to date, 5.6%, as you can see right here. So yeah, but in the last year, it's still down 2%. Not a bad idea. Not a bad idea, honestly. It's very small, so I understand, and I've thought about it too. I only have 8.6 shares, so it's only, yeah, right now it's a very small portion of the portfolio, and I'm up 34.7% right now in Coca-Cola. So not a bad idea. Move it into SCHD and then, go from there. Maybe a move that I should make. I've been buying Ethereum every day. I look once a day, and if it's $2,000, I buy $20. If it's 1,982, I buy 1982. It makes me the suffering more fun. Wow. Yeah, but you're holding long term, right? You're holding for a little while, so let's see where it goes. I think it's still gonna be on the downside. Some, uh, we're gonna be suffering a little bit more longer. You know, I think before we start seeing some upside on the crypto market. I'm with Thrill here from Tim. Yeah. Maybe in the near future. Maybe in the near future. Right now, I'm making my move in Bank of America. I'm almost done, Thrill. I know you just joined, so I'm now 13 and a half shares. So I sold 12 shares of Bank of America this week with 87% in gains in those 12 shares. And then I bought another share of Meta today at $633. So it brought my cost per share down to $646. So I now have 3 shares of Meta, almost $2,000 invested in Meta right now. So I think Meta is gonna be my single. Maybe by later this week, Meta is gonna be my single stock, my largest single stock. Let's just say. I don't know. I think it's crazy, right? That I'm gonna have Meta as my single, as my largest single stock. Yeah, because I think I'm buying one more share. Thrill. I'm down 50% with Hims. Ooh, wow. Wow, Thrill. But hopefully let's see, in the long term, if you believe in the company long term. Let's see if their business model, you know, which I think, their business model is gonna be okay for the future. You see the revenue growth. He has been accelerating. So that's good right there. That's good growth. 49% revenue growth. If they continue at this pace, I think it's gonna be good. You know, your KO position is worth 21.6 shares of SCHD. That's not a bad idea. That will bring me to 386, 396, almost 400 shares, right? Yeah, almost 400 shares of SCHD. Not a bad idea. Not a bad idea. Hmm. Let me think about it, Tim and Thrill. I kind of hope it stays low. Gotta flush out leverage, get clarity done, 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 and then wait. Yeah. Yeah, especially on the crypto, right? That's what I think you're talking about. So yeah. Yeah. See right here. How about XRP? XRP is at $1.42. Down 53% also in the last 6 months. And then you have Solana, and is down 51% pretty much. 51.81% in the last year. In the last 6 months, 55%. So yeah. I pretty much went with Bitcoin. I think Bitcoin, Bitcoin is pretty large. very popular out there. I know that there's no valuations or anything like that that I can look at and say, oh, yeah, it's at a good price right now. It's not at a good price, you know. So, yeah, let's see. Let's see where it goes. But yeah, I think let me see, it's 9:55. So yeah, so I only got like 5 more minutes, guys, and then I gotta, if you ever need math, just ask. I live for those moments. Yeah, I've noticed, Tim. I've noticed. I gotta see how I can boost my dividend income once again, because when I saw this, and going under $900 after I went over $900 in estimated yearly dividends, I was like, oh man, it didn't feel right. It didn't feel okay. I want to have more and more dividend income, but I also see Meta as an opportunity right now. So, and you never know, maybe in the future, something changes. Meta continues to accelerate in revenue, in their fundamentals pretty much, and could probably sell that position and get something else, in 5, 7 years from now. Maybe some more SCHD. Maybe Meta will help me in that aspect. Or maybe I'll do one of those monthly cover call ETFs in the future. You just never know, right? How everything will go. But I would love to grow my dividends some more, though. I need to get back to the 900. I do believe that this week I should get back over 900 in estimated yearly dividends once I make the deposit on Friday. So yeah, but I'm gonna be posting on X though. I'm gonna be posting on X. If you guys have me on X, you guys would have seen the trade that I did or my purchase on Meta before I went on the live stream. I posted it on there. So I'm gonna try to post a little bit more on there. Try to grow my X account a little bit more. But yeah, $394 in estimated yearly dividends from SCHD. Hmm. It's crazy. Like if I add something with like 10% dividend yield, something like JEPQ or GPIQ or something like that, that would definitely boost my dividend income a lot. That would feel good to get those dividends, especially the monthly dividends. But yeah, I'm gonna try to be posting more and more on X, especially while I'm in Puerto Rico next week. I'm only there for 3 days, so but I'm gonna try to post a little bit. I'm gonna spend some time with my family there, especially with my mom. But I'm gonna try to post on X any moves or anything like that that I make while I'm over there. While I'm in Puerto Rico, I can still trade. Just remember that. Um, so yeah, but I also want to deposit a little bit more into the growth portfolio. Honestly, you know, I'm even thinking, I should be getting my check from YouTube pretty soon. Well, I don't want to tell you the amount because I want to make it in a video. I want to put it on a video. But that is gonna go to SCHD. But I was also thinking maybe this time I should put it into my growth portfolio and put it into Amazon. I don't know. I'm still undecided. I think most likely I'm gonna go with SCHD. Just putting it on there, but I was also thinking about it. 3% dividend yield is good. Yeah, yeah. I'm a fan of that too. I can't wait for Anders to live stream this Sunday. LOL. Anders, you gotta post it right there. Gotta post the link. For the live stream on Sunday. Oh man. Yeah. Yeah. I'm gonna see. Let me see. Take footage while in Puerto Rico, content wise. People love anywhere that isn't where they are. That is true. That is true. Yeah, I do have to, I've never been a person that takes like a lot of pictures and a lot of videos. Now is when I'm getting a little bit more into that as I make content, and I should take some videos for sure. Yeah, I'm gonna try to do that more. While I'm there, I'll probably post more on X than on here, but I'm gonna try to put some content here too, though, on YouTube. I'll probably post a couple things. Let me see. Let me see what I come up with while I'm there. So I can definitely post it. Post a couple pictures. I do want to take pictures, so I'll post some of that. Yeah. All day killing zombies. So that's what Anders. That's what you're planning on streaming, killing zombies. That sounds like fun. To be honest, I haven't even played PlayStation in a while. So, but yeah, guys, this is pretty much the last live stream for this week. So I'll be on live stream again, God willing, on Wednesday when I get back. I get back early in the day, so I should be able to set up everything and even maybe put some stuff in the computer that we can talk about next Wednesday. Next Wednesday I should be back streaming already. I'm gonna try to make a video before I leave to the airport. On Saturday morning, because I'm pretty much leaving my work early in the morning. I work overnight, so I'm gonna be getting out. Yeah, I'm gonna be getting out early in the morning. I come here, I do a couple things, try to take a nap, and I'm gonna try to do the video for Sunday though, so I can post it, so I can schedule it to post it on Sunday, um, and then you guys, all you guys need to, all you guys will wait for will be the live stream next Wednesday. So let's see. Chef Anders, cooking with stocks. I like that. I like that. How to predict the stock market through zombie killing. That's a good topic, especially if you start with how. And there's the mistakes and the speed to erase those coming this Sunday. LOL. Maybe I could do an anti AI stock investment stream. Oh, wow. All the things going on inside tech companies and why you do not want to invest in them. That's a very good topic. That's a very good topic. Anders, why not? You have some insight, so that's always good to have some insight on some of those tech stocks. And guys, don't forget to hit the like button. Very, very important. We got 16 likes. There's 22 of you guys there. There has been quite a few of you guys. Oh my gosh, look at 24, 25 people. So quite a few of you guys. I really, really appreciate the support, man. I really, really appreciate your guys' support. See you Sunday, Anders. Safe, because I might lose my job. Oh, wow. Why? Hopefully not. Oh, thank you, Lawrence. Thank you. Thank you. Thank you. Thank you. Um, yeah, I'm hoping I do have my luggage there. I'm taking that carry on. I'm taking a backpack for just a few things. Um, Ryan, what's up, Ryan? Yeah, you have a safe trip, man. Yeah, thank you, Ryan. Yeah, thank you, thank you. I'm leaving this Saturday. This Saturday night, I'm leaving. No, Saturday afternoon. I'm leaving, getting over there. See my mom for a couple days, then get back. You guys might see me gain like about 10 pounds, though. You know, because I'm gonna eat a lot of stuff. Oh, my mom is excited too. My mom is excited too. So thank you. Travel safe. Thank you, M. Thank you. Have that. I do have to get a little gift bag because Anders, I am following your advice not to wrap the gift. So I have it packed already, and I just gotta get a gift bag so I can put it inside the bag, and that's it. Uh, so yeah. And what else? What else? I can't forget my passport. I already, yeah, I already have a few things. Fast speed, brother. Thank you, Brainchild. And yeah, so that's that. And what else? I think that's it, guys. I think that's it for me today. I really appreciate that all you guys were here. We had, quite a few things that we spoke about, super investors, portfolio, my purchases, um, IPOs. I thought that one was a pretty good one too with the IPOs. Um, so yeah, I thought we had a good one today, though. But yeah, hopefully anybody that is watching the replay, enjoyed it, and you guys can answer me in the comment section. Which IPO would you invest in? From the list that I put on earlier, for sure. But yeah, I think this is pretty much it for me, guys. Don't forget to hit the like button, subscribe to the channel, like I always say in every video. And nothing. I'll see you guys next Wednesday. So stay tuned. Don't unsubscribe, so we can see next Wednesday. And let's see what topics come through. And I'll definitely be posting some pictures and stuff from Puerto Rico. I'm going to try my best. I know I'm not very good at it, but I'm going to try my best. All right, everyone. Like button, subscribe to the channel. Thank you, Ryan. I will stay out of trouble. But yeah, thank you, Ryan. I really appreciate it. So don't forget, guys, hit the like button, subscribe to the channel. Leave me anything in the comment section. And I hope you enjoyed this one. And I'll see you in the